Hi, this is Jason Sen from daytradeideas.com. We're having a look at the euro today, the 5th of November. This is a weekly chart of the euro. We've been following this quite closely because it's thrown up some good trading opportunities recently. We rallied quite nicely through the summer and reached a 61.8% Fibonacci retracement target of 138.33. We called a high for the market here last week, and indeed the market topped out almost exactly here at 138.32. So this has worked out perfectly. We saw a steep sell-off last week back down to the next Fibonacci support level, which is at around the 134.86 or 134.90 area. So it's achieved our first target. You can see that the weekly stochastics are starting to get quite negative, but overall the picture is actually still quite positive. We're still in an uptrend. We're holding on to that. We're way above the 200-week moving average. So although we've seen a retracement, there's nothing to get too negative about the euro yet as far as the weekly chart is concerned, at least. So let's have a look at the daily chart. Does that back up what we're thinking? I'll just remove some of these. We have come lower, as I've stated, but we're already finding very, very good support here from this uptrend line, which goes back to around the middle of July. So we've got a few months of uptrend. That's been held almost perfectly yesterday. You see yesterday's low was at 134.42, and that's just perfectly right on that multi-month trend line there. We bounced off. Yesterday's candle was quite bullish. The spike lower, the higher close, the close below the previous day, above the previous day's high. So that's all quite positive. We're sitting just above the 55-day moving average at the moment. So really, this could be marking the end of that little correction phase that we've had, and we've got to stick with the bull trend at the moment. We'll have a look at the 4-hour chart just to get some idea of what's going on there. MACD's turned a little bit more positive here, which helps back up that theory. In the short term, the stochastics are a little bit overbought, so we might just drift lower and retest that 134.40, 134.20 area. But I think that gives us a nice opportunity to get long again if we missed it on the first go. Just flicking back to that daily chart, you can see that 134.20 is also a good Fibonacci support level on the daily chart. So if we were just to spike through the trendline support, which today is around the 134.45 area, we could get as far as 134.20, but I think anywhere within that band you're looking to get long, with stops somewhere below the 134.00 area. Break below there would be a problem. We'd probably start then heading for the 133.37 area, which is the 100-day moving average. But again, we're getting oversold on the daily stochastic, so I would feel fairly confident about buying in the low 134 area if we were lucky enough to see that again, as I've said. And that's pretty much it for the euro at this time. Thanks very much. I'm Jason Sen from daytradeideas.com.